Friends, in this video for I Thought Wealth, I am going to talk to you on the topic when sentiment moves into reverse gear. When you see bullish sentiment where everybody agrees positively on something, when we see consensus that a stock or a sector is an absolute buy, we expect that this consensus will last for some time, maybe a year or two. But we live in times where the breakdown in consensus is very, very fast. The markets create and unwind consensus at a pace not seen before. We have seen this in multiple sectors. It takes 2 quarters to build consensus and just 2 more quarters to completely undo it. Recently, we have seen this happen in the IT space. As late as January 17 of this year, we saw this consensus play out in IT stocks. Not just the frontline blue chip companies, even the laggards and the usual disappointing stocks became darlings of the market. Even the small and mid cap IT stocks became the flavor of the season. That's how this year began. In just 2 quarters, the situation has completely turned topsy-turvy. Today, most people believe that the valuations of IT stocks need to derate. And they are saying this at a time when several of these stocks are very close to their 52-week bottom. This is something which nobody would have predicted in a sector like IT, that such a rapid change in sentiment, a reversal in fortunes would be witnessed in the stock market. But we have to learn to live with such fast changes. We have to always be ready for the markets to change their mind and do it in a way which is too fast. Effectively, we need to be ready to act when it is the time, to be a contrarian when nobody wants to be, and to profit from these mood swings of the market. One thing is for sure, you need to be very valuation driven, be aligned to the rate of growth in the business, be aware of the trajectory of margins, and always be conscious of the company's capital allocation. So you cannot take a broad sectoral view anymore. You need to be very, very company specific. Around a market top, we have the luxury of taking a sectoral view, but at the market bottom, it makes immense sense to only invest in the companies which are proactive, which will use adversity to come out stronger from it. Naturally, the DNA of the company, the quality of the leadership, the business composition of the company, the geographical presence, and the cost structure are all going to play a very, very important role. So, when you see tech going through so much of negative sentiment, you need to be conscious of which tech companies you want to bet upon, which are the companies that will be more resilient, which are the companies that can swim against the tide, because the companies that did well in the last calendar year had a lot of tailwind, whereas now they have to swim against the tide. Headwinds are going to rise, and not everybody is going to do as well as they did just 6 months ago. Importantly, this is a great example of how consensus can be created and destroyed very, very fast, about how the market can change its mind very decisively in short periods of time. I'll leave you with the thought that as a sector goes through more and more headwinds. As it adapts to challenges, as it prepares to overcome them, the stock market will become more and more fearful, and it could become most irrational exactly when the company is moving out of a phase of extreme difficulty and business turbulence. In my view, that would be a great time to buy such companies, build your position for the long term, and then wait for better days. Nobody knows how soon the best days would arrive, but one thing is sure. In the kind of economic circumstances that we live in, when the best of times arrive, the market would always take due cognizance and recognize the performance of the company. Thank you for watching this video.